Welcome to the Business 7 show. This week we are joined by Simony Storm economist Almandro Jansen, and we'll be reflecting on the key trends that made the headlines in 2025, talk about a recent decision by the South African Reserve Bank to set an inflation target of 3%, and discuss the recently released investment promotion bill, which is currently out for review. MTC recently delivered a profit after tax of $1 billion. Its MD, Dr. Licky Erastus, gives the reasons why the company was able to post this impressive profit figure.
One that produced the results of today focused on stabilizing our core. It improved our operational efficiency and laying the foundation for digital transformation. The 1st of October, we launched what we call the ISBP 3.0. which in my next slides I'll briefly touch on in terms of what the focus areas are. Now, between 2022 to 2025, our strategic priorities were operational excellence, cost optimization, innovation, service excellence, as well as revenue growth. ISBP 2.0 allowed us to maintain market leadership, to grow data usage significantly, and position ourselves for the next strategic cycle. Our results reflect the success of that disciplined approach.
Staying on matters related to MTC, Dr. Erastus also outlined the company's plans to expand outside of Namibia, saying that there is demand for its services.
In terms of the second question,
is it regional expansion? Is it local, or
yes,
how far do you go?
It's both local and regional. For the past year, we've been talking to neighbors who need services. You will note that I spoke to a data center that we are setting up. You will also note in the report that we had significant investment, especially in our fiber backbone. And that emanates from conversations that we are having with some of our neighbors where they need services from MTC as well. So this also speaks to international.
The country chairperson for Shell Namibia, Eduardo Rodrigues, recently in a discussion on the future of oil and gas in Namibia, encouraged government to issue out license blocks for oil companies to start exploration activities as soon as possible, to ensure that they are able to study the license blocks that have been awarded to them, and also to enable them to reach investment decisions faster.
If they award a block today, okay, you have an exploration license for 4 years. There you have to acquire seismic, identify prospect studies to make sure that everything is perfect. So 4 years. Let's say that we find a prospect. Then you move into the second phase of exploration, where usually goes with a well commitment, around $100 million of investment, with a possibility of 10% to be successful. But let's say that we are lucky and we hit a discovery, the longest basin. Okay, in those 2 years we built, so that's 6 years. Okay, and let's say that that discovery is so good that merits appraisal. So then you go to the third phase of your exploration, and you do 2 or 3 wells to appraise whatever you found. Okay, so that's another 2 years. We're talking 8 years. And let's say that everything goes perfect. Okay, then you say, okay, I'm going to declare a petroleum field, which usually it's 2 years. Now we're in 10 years. And in those years, you do the question that you asked me. You do the planning. Everything has to go right. All the conditions, the tendering, the contracting, assuming there's no technical challenge, which is what we have to begin. The most challenges are technical. But let's say that everything goes right, and then we do the very well-awaited final investment decision, which is the FID. Well, we all talk FID, and we talk about it very loosely. But FID, we're talking about 10 to 15 US dollar billion, and I'm going to follow here the advice of Roland, relatively. That's more than the GDP, the gross domestic product of Namibia. So you're making a decision to invest the gross domestic product of a year of the lifetime of a project, and that's why you need stability clauses. So it's a lot of money. It's a lot of money in the company, and that money is competing with Guyana, Brazil, Gulf of Mexico, which Gulf of Mexico it's Gulf America these days, that it has already infrastructure, that it has no royalties, that it has corporate income tax, that it is fully competitive. So that's what Namibia is competing. So we're not competing as Namibians, and I say me as a Namibian because I'm responsible for Namibia, and I want the money to come to Namibia. So we're fighting worldwide with all this capital to attract it. So that's why it's so important to have these stability clauses that Roland was saying, to make it more competitive, easy to do business with arbitration, etc.
Staying on oil and gas matters, Rodriguez also encouraged Namibia to come up with a local content policy that is favorable to locals but also makes sense for international companies to plow millions into Namibia as part of their activities to get oil and gas out of the oil wells.
Well, the main point is at the end is how attractive the country is to bring investment into Namibia. Okay, so if we look at what has happened in the last year in Namibia, is quite amazing. So I think as a country, you have the proper policy, the proper regulation, the proper incentives to attract the companies that have come to Namibia and believe in the country. If we look at what has happened since the first discovery that was declared in 2022, and we look less than 4 years as a total, there has been 26 wells that have been executed in the Orange Basin, and that's quite remarkable. So clearly there is the investment climate. Now there's a couple of things that need to be done, and we're working together as an industry and the government to make sure that that investment case of Namibia remains, so that it can attract more investment activity in the exploration field.
All right.
I think we need to keep doing what we have been doing, which is open dialogue, constructive conversations, understanding really what are the challenges and what do we need to get a fair share for the investor and for the country. And that's what I think Namibia it's quite unique. And if we continue in that trend, then Namibia will maintain its investment case, and hopefully we can bring more investment into the country. Now, one thing that I would like to add is it will help to get new licenses award, because all the investment is happening in the Orange Basin, and there is the rest of the country to invest and try to understand how the subsurface looks like.
Thank you so much.
Local economist Roland Brown echoed Eduardo Rodriguez's comments, saying that there wasn't a need for Namibia to strike a careful balance behind when it creates its local content policy.
To have highly ambitious things on day one is actually at the moment proving detrimental to Namibia, in the sense that it's delaying, these fiscal revenues and these big investments. And if we're just a little bit more sensible about the process and the timelines to ease into trying to get maximal local spend, that is probably going to be net beneficial to Namibia vis-a-vis trying to do everything on day one. And I think that we see this in the mining industry. The onshore mining industry spends 26-27 billion a year on local procurement. Now that's a little bit of an iffy number, because some of it is just the local office of Barlow World, for example. Some of the money leaves again. But these are easy things to sort of regulate and control and track. But that's taken many years. Our mines, some of the older mines here are 60s and 70s. So we're 50 years, 60 years into that industry. And I think with the oil and gas industry, we must aim to be much faster. But that doesn't mean overnight. Overnight's not realistic.
Life is unpredictable, and one needs to be protected against any eventuality. Get Santam legal access from as little as $50 Namibian a month for when you find yourself in need of legal representation due to civil cases, criminal prosecution, and family matters such as divorce, child maintenance, and custody. It also covers labor disputes, disciplinary hearings, and unfair dismissal or retrenchment. With Santam Legal Access, you'll receive free legal advice on almost every legal aspect, whether the specific matter is covered by your policy or not. For true peace of mind and legal protection when you need it most, call us on 061 292 8000. Santam. This is freedom.
Thank you so much for joining us on the Business 7 show. You've been a very, very good contributor to the show for 2025.
Thank you so much for always having me.
What were the key themes or the highlights that stood out for you in terms of 2025, in terms of what drove growth? What were the significant developments, the significant events? Where did we get it right? Where did we get it wrong?
Yeah, I think obviously on the point of growth, we really saw that mining once again was the standout. We saw that commodities such as uranium, gold, and also copper, because obviously, like we said, we're very a country that's driven by commodity cycles, and those were the ones that were booming this year. And we saw that uranium obviously also touched quite highs, and copper also being one of the future commodities for electrification that's really been driving that. So we see in that aspect that's really where the growth has been coming. But we also have to pat ourselves on the shoulder when it comes to tourism. We saw that tourism really resurging. The previous pre-COVID-19 levels are being reached, and we're seeing that we're tapping into new markets, not new markets, but previous markets are really emerging, such as the Italians, the French people are really coming in, and we saw the visa regime the nitty-gritty hasn't been sorted out, but we're really seeing the fruits being picked off from the visa regime that's really picking up. So I think when it comes to tourism, and Namibia is just becoming more attractive, we're seeing that more and more filming tourism is happening. A lot of people are also coming for sports tourism. We've hosted a lot of sporting events, and overall also business. Namibia has really become attractive when it comes to business travel. A lot of the airlines are saying they're full when it comes to business travel. On the other hand, you can say it's the resource curse that's slowly but surely creeping up, with a lot of the flights being filled with business travel rather than leisure travel. But overall, I think those are the ones that were driving growth for 2025. Here and there, construction has been a little bit under pressure because of certain projects being delayed from government side. But overall, when it comes to the private sector, we're really seeing that building in Windhoek, building in Swakopmund, and also Lüderitz is also now starting to pick up. So we can really see that the construction sector is also contributing much to GDP, and it's what we expected in the beginning of the year.
But surely there were, as much as there were hits, there's surely also been misses in terms of maybe we got this wrong on policy side, maybe we're not doing enough to entice investment in oil and gas, or maybe we're just too focused on this specifics instead of having an holistic picture to growth.
Yeah, I think when it comes to policies and investment policies, I think what really rattled a lot of investors was that 51-49 ownership, where was just spoken about at the mining week, and I think that also rattled. We saw that certain stocks also, one of the Australian companies that were mining in Namibia, they took a little bit of a hit, and so those type of policy uncertainty is really not good for foreign direct investment, and investors don't like that type of uncertainty. They want clarity when it comes to what exactly are we getting in this economy, what are we getting, because if that's going to be the case, a lot of these oil and gas majors, it's not their first rodeo. They know exactly how to play the long game, and Namibia must realize that we're not the only ones that are enticing in the world. We need to make sure that we basically play it in a way that we look after our local content, we look after the Namibians, but we also look at what's it in for the foreign company coming in. So we really need to strike that balance when it comes to policy certainty going forward.
What do you see driving growth? We're at the end of the year, going into 2026. What are the key drivers that are really going to fuel this engine called Namibia?
Yeah, so I think it's along the same story as for 2025, with mining being at the forefront once again, uranium, copper. We do also see that gold could possibly resurge. Once again, a lot of international views are saying that gold could surge past the 5,000 ounce. So that's really a big possibility, but because we don't see there's no longer a correlation between uncertainty and gold. Gold is just rallying in a sense of that people are seeing it as it's a valuable asset, no longer just as a safe haven. So that's something that we need to keep in mind. And copper and uranium, with nuclear energy, and copper being for electrification with AI or the data center, so that's really needed. But I think the one that people are not really paying attention to, and it's to do with the weather patterns that's playing out, with the La Nina weather pattern that's playing out, where we're receiving much more rainfall than expected. So I think agriculture will be a big driver in 2025, maybe not in the first quarter, maybe onwards from Q2 all the way to Q4. So that's something, because agricultural investment's really big in NDP 6. So that's what we need to look at, is how is agriculture really going to play a big role, and then obviously once again tourism.
I want to keep this just for a brief moment before we move on. You've touched on agriculture, and there's this drive to get our green schemes up and running. Do you believe that there's been enough momentum? Because surely there's this asset, but it's I would think that it's underutilized.
Yeah, I think it's also I think it's being like you mentioned, underutilized. But it's more of that thing of, we need to look at it in a way that we need to train our farmers. Some certain farmers just know how to run operations. But when it comes to actually running the business, that's where a little bit of lack comes in, and that's where AgriBank needs to come in, and African Development Bank, and say, listen, you guys know how to do the operations, but now let's also have workshops and certain tools to provide these farmers with the understanding and the know-how of how to operate these businesses, and to make sure, because at the end of the day, the operation side might be good, but the business side might be lacking, and that's where the private sector needs to be engaged, because we're sitting on a world of wealth when it comes to the private sector and knowledge of people understanding operations and businesses, and to know how to basically draw from that human capital resource that we have in the private sector.
There was a very, very big, significant event that played off, where Namibia made its biggest single payment on one day, and that speaks to the settlement of the Eurobond.
Yeah.
How does this bode for our image internationally?
Yeah, I think especially for foreign lenders, Namibia is really at the forefront, because I don't think any of our peers around SADC has achieved such a monumental type of thing to pay, and especially for such a small country. 750 million is quite a substantial amount, and it shows credibility going forward. It's like our rating is improved. I think in next year, May, our hearing will be final for the grey listing. I know South Africa and Nigeria got removed from the grey listing, so that just kind of boosts our argument to be like, hey guys, we can be taken off from the grey listing. And also looking forward, especially for the next 10 years, especially with the oil and gas, green hydrogen, we will need external funding, we'll need foreign direct investment. So it just kind of boosts our credibility in a sense of, we look a lot more attractive. I think the only uncertainty going forward is obviously our foreign reserves dipped a lot. It dipped below the 50 billion mark. So that's what we need to look at, in a sense of, is it really in the way that we wanted to handle it? And also they had to obviously take certain loans from the local banks, so that's also another play. But I think we can just see the positive in it.
There's been a lot of criticism, and specifically sticking to the Eurobond, that look guys, fine, we settled the Eurobond, but we traded one debt instrument for another. Did we really effectively settle this? And surely there were better ways and means to go about settling this. So what are your views to such comments?
Yeah, obviously everyone will have the 2 cents of how exactly one should have handled it, but I think in a way that we need to look at it in a sense of, okay, this is what we've done it now and everything, but going forward for our funding and government requiring necessary more funding, we need to strike the balance between operation and the development budget. I think that's where the imbalance comes, is that the government's very focused on the operational budget expenditure, and there's a little bit of an imbalance compared to the development budget. The development budget needs to be the one that outweighs the operational. So if it needs to be that government needs to take on less employees, or certain operations that need to be cut, they need to make sure that they do that, because at the end of the day, the infrastructure, the development budget is the one that's going to push economic growth, job creation, and that's what we need to look at, focusing on more of the funding. If we're going to acquire funding, make sure that it's ones that stimulate economic growth rather than just stagnating. Because I saw a very interesting thing that said the other day that government spent 4 million Namibian dollars on just iPhones, gadgets. So I think that money like that could have been spent elsewhere, and that profit that would have been generated from the infrastructure or some forth can be utilized for operations. So it's just striking that balance in that sense.
It's interesting that you touch on the aspect of the development budget, where again you say it's a driver for development and growth. But we often hear from government that execution rates are also very low in terms of just getting projects out of the way. So we increase the development budget, but then we're sitting with this problem where we have low execution. How then do we fix that or address that also?
Yeah, I think that's what they're trying to do with the central procurement plan, in a sense, and the board. That's what they're trying to do. That there's overseement when it comes to projects, when the project's being almost ticked off when it comes to different phases. So I think that's what we need to do. We need to have people on the ground. We need to have watchdogs to ensure, okay, we're ticking all the boxes for the necessary steps or the phases that for the certain projects, and also like a private and public engagement needs to be there. We need to involve the private sector when it comes to these projects, because once again they're the ones with the expertise and that know-how of how to basically, in a sense of profit-driven, revenue-driven operations. So bring them into the mix and make sure that they're also involved, that government can also be held accountable. And I think transparency needs to be key from government side if they really want to see things happening, like engage with certain stakeholders and say, this is the progress that we're making, this is the plan, so that we just ensure that the transparency is filters through.
I am moving the conversation now on to central banking matters, and South Africa, the anchor country, or the South African Reserve Bank rather, set this inflation target of 3%, with a 1% tolerance gap, either below 3% or above 3%. There's all these arguments that are being made that it will help drive for lower prices in the economy in general. What are some of the challenges that you see Namibia anticipating? Because surely we have to set our repo rate, or rather our monetary policy, in line with the anchor.
Yeah. So at this moment in time, I think for South Africa, it's a very good step in the right direction when it comes to this. I think it's global standards of 3%. It's uniform. So I definitely think it's a step in the right direction. I think for the first few months and maybe a year or two, there will be some time that South Africa needs to iron out all the fine details and to make sure that we do go below the 3% mark, because they're currently sitting at 3.6%. So if they have to, or they have adopted it now, so inflation is kind of high in that sense because it's above what their target is. So it'll take some time for them to iron it out and to make sure that everything falls into place. So in that time that Namibia, obviously the peg of the Namibian dollar to the South African rand 1-to-1, it does leave Namibia in a sticky situation where it's a little bit hard to cut rates, because in that sense of that Namibia will basically experience inflation, import inflation, because in that sense South Africa's inflation is high and majority of goods are imported from South Africa. So that's what Namibia need to look at. But once that sweet spot is struck by South Africa and Namibia decides, okay, we're going to adopt this, then obviously for Namibia it's a good thing, because then we're going to see lower inflation for Namibia, and also the central bank of Namibia will have more room to cut, and this will obviously just benefit corporates, households, and everyone in the mix, that basically money becomes cheaper, credit becomes cheap and more accessible. So
before I let you go, the investment promotion bill is currently on the table, out for review. this bill, there's obviously it's been coming somewhere, and there's with any other legislative piece of with any other regulation, there'll always be positives and negatives. Just your view from what you've read, from what you've seen, and do you believe that we're going in the right direction? What would you suggest? What can be taken out, etc., etc.?
Yeah, so obviously we don't know the fine print of exactly of what the investment bill, but I think they're being revised already is already a step in the right direction of saying, listen, what was previously put in place maybe not applies to modern day, so we need to look at it and see, okay, how does it become more attractive for foreign direct investment to come in, for foreigners to want to promote businesses in Namibia? And I think that's what we need to do. We need to be flexible and open to say, like, listen, we need to welcome our borders in, because if you look at an instance of Dubai was one of the countries that they said we need foreigners to come in to bring investment in, to bring companies in, and also just to train our people for human capital, because we've got one of the youngest populations. Africa's got one of the youngest working population in that sense. So that's basically, I see it as an asset. It's a really good asset to have, because you can basically train our people for the next 20 to 30 years and make sure that Namibia's economy flourishes, even when all our natural resources are necessarily depleted in that sense. That the everlasting thing will be our education, our training, our skills that we've built up in there. So I definitely think it's a good thing. I think it's just a matter of time. Time is a big thing. We need to be not hasty, but we need to speed up things. This certain thing of delays is really just holding us back. We need to ensure that we're on the ball when it comes to certain things. If a policy needs to be reviewed, if things need to be revised, we need to be on the ball when it comes to these type of investment policies that need to be analyzed.
Thank you so much for joining us on the Business 7 Show.
Thank you so much for having me.
Thank you so much for joining us on the Business 7 Show. Hope to catch you again next week. Have a lovely evening.